Hi, I'm Kyla Neal, a business coach and mentor from Australia and I'm a mum of 2.
And I'm Emilia Ohrtmann, a multi-passionate entrepreneur and a mum of 4. I am from Germany, but I live in Dubai.
In our raw and authentic episodes, we share with you business and personal tips we have learnt along the way while starting and growing our global businesses, as well as bringing you inspiring interviews with other mumpreneurs.
This is a podcast from mums for mums.
Welcome to our Mums in Biz podcast.
So I think we're live. And I checked on my phone, it worked. So I'm super happy.
Excellent.
Yeah. Last time we had huge technical issues and I panicked totally because it took me 20 minutes to work it out and I knew there were actually people and it was yeah. So this time I was normally I'm not so nervous, but this time I was super nervous because I'm like, oh my God, this technology things. Anyway, how are you today?
I'm very well, thank you. Doing good.
Good. We have a few people already, so I think we will just start. You know, people know what the topic is about, so I'll just do my podcast intro and yeah. But if you're joining already, and just a quick housekeeping note, if you're joining already and watching this, you can leave comments and we will see them as well. But in order that we can see your name, you need to click on the link that I put here below, or type in the link in your browser and just allow Facebook to show your StreamYard. No, allow StreamYard to show your Facebook comments. So there's one comment already. Renette did it. Renette says hello and hello in German. And she must have done that already. So if you want to post a comment and we should see your name, please remember to click that link first. And somebody says, because otherwise we see you just as Facebook user. Somebody said, hello, good morning. So we don't know who that is, but it doesn't matter. I mean, we will just answer your questions whenever you have any questions. Just type them in and we will come back to them when it suits, basically. Kyla says, hi, guys. Perfect. Okay, so let me go back to my welcome message here. So today, welcome to episode number 46. This is going to be. It will launch live on iTunes and SoundCloud and Spotify next Monday. And today you're being part of the second live recording that we do in the Mums and Biz Facebook group, which is a bit nerve-wracking for me, but I think really great actually that we are doing this. And I got a lot of positive feedback about it last time, so that was really nice. And in today's episode, we want to talk about finances and wealth management and money, essentially. And we thought about this topic because it's a topic that so many women, so many of us, and I wouldn't even exclude myself or Kyla. I'm talking for Kyla here now. Even though we are probably quite good at it when it comes to the majority of women, but I think a lot of women avoid this topic or try to pass it on to somebody else, especially their husbands, if you're married. I don't know, some even do it, pass it on to their boyfriends. And yeah, I wanted to understand more about the why and how, and show you how important it is to think about your own finances and to know about your own finances and to take control, really. I spoke to so many women already and a few of my friends as well who don't have access to their joint bank account, who don't know what's going on with any of their finances. I mean, they pass everything on to their husband and he has a plan or hopefully, but they basically don't know. So if he was in total debt, they wouldn't even know. And that never occurred to them that it might be important for them as well. I mean, hopefully, God forbid, nothing will ever happen to any of our husbands. or partners, but it could be, and even if not, it's good to have this 4I principle and know what's going on, especially if it's not only his finances, but your joint, or even if you have your own income and he takes care of that as well. So I've heard it all, actually. And the other day, a friend of mine told me that she lost her credit card, and her husband didn't get around to give her a new one. And she didn't have any access to their money. I mean, she has her own money as well, but still, she didn't have access, because the only way she had access to that money was that credit card. And it's not the first time that I've heard this story here in the UAE, especially. But to be honest, even in like where I'm come from in Germany, women tend to procrastinate with this topic and not look into it, and so on. And so I thought we have to talk about it. I did like a long Instagram live about it on Thursday, which you can actually see a little bit about my own story with finances and so on, which you could actually see on my Instagram account if you're interested. But I had a few women connecting and confirming all this. So this is such an important topic. And that's why we brought on the expert today, Sophia, a wealth manager. And one more thing. I also went to a networking event maybe a year ago. I can't remember, but it had a speaker there about the same topic, really, how to invest in the stock market. And what I realized, and what I found honestly a bit shocking, was it was a networking event for women again. And I would say 80% of those women, just a guess, didn't even know what a brokerage account was or had a brokerage account for themselves. So everything that this guy the man was sharing in the front, they had never heard. So I thought this is definitely something we have to talk about here. Yeah, and I know Sophia through a networking event that she organizes, which is called Moms in Business, right? Yeah, Moms in Business. And yeah, which you can, by the way, just as a side note, you can join that anytime. It's online, so there's no excuse. Every Wednesday, 12 o'clock. Little marketing here. It's a really good. It's basically what we do as well here. So it's great. And yeah, that's how I know Sophia. And yeah, so I thought we have to bring her on and talk about all these questions and all these issues and what you can do and so on. But before I have Sophia introduce herself, I want to thank all of you again and all our listeners inside this Facebook group and on iTunes and SoundCloud and Spotify and everywhere for all your nice feedback and comments and your Instagram comments. And honestly, it means the world to us, to Kyla and me, and also the people we interview, the women we interview. So it's a great help. So keep that going. Thank you so much for all those nice comments. And I want to thank one listener in particular, which is Karen Ohrtmann. She's an author, actually, and we have interviewed her in episode 31. And I thought it was so nice that the other day she commented on iTunes, and I finally figured out how to actually see those iTunes comments, which took me over a year. But anyway, she commented and said, timely and useful information, which I actually look forward to, a brilliant resource for busy moms everywhere. So thank you very much, Karen. And I think we will bring her on again inside this group or on our Instagram account to talk about authors and book writing, and because I've written a book, so I want to talk more about that as well. But now over to Sophia. Yeah, you just introduce yourself. You can do that much better than I can.
Oh, thank you. Thanks, Emilia. So yeah, good morning, good afternoon, depending on where in the world you are. It's my pleasure to be here with you. And, from my point of view, I am a wealth manager. I've been a wealth manager for the last 15 years, helping many people around the world, really, Europe and now the Middle East as well. I'm qualified to a very high level. So, it's taken me many years to get to the stage that I'm in now. But this in particular, this chat was really important to me personally, because I feel very passionate about women and finances. And some of the, some of the comments and the questions that I hear is, for me, because it's my, this is my job. I find it amazing that we still have women today that still really don't understand and have a grasp of their finances or their family's finances. So if I can give you a tip today, or motivate you to get more involved, then that's job done, or it's a start anyway from my point of view. So yeah. I can sort of, would you like me to keep going, Emilia, or have you got specific questions that you want me to answer?
No, I mean, if you want to say anything else, then add it. How did you get started? Why did you start? Was it anything in particular, or was it just coincidence, or was it your parents telling you what to do? Because
in terms of my own, yeah. Well, okay, so that was quite. It was coincidental in a way, but also then I developed a passion in the area. But at university I did economics, and then went on to do masters in finance and investment. So I was already in that field, if you like. And then I worked for some of the largest banks in the world, and became a wealth manager, a financial advisor. But what I've realized over the years is a lot of my clients are actually women, and the reason for that is actually quite clear, and I'll come on to this a bit later on as well. The majority of wealth managers or financial advisors are actually male. That's just a known fact. And so to find an advisor who's a woman, for women is great, because as women we're very emotional, and we want to speak to somebody, and we can only open up to somebody if we're on the same level as them. And we tend to find that level with other women rather than men, just because women understand each other much better. And from a financial point of view as well, a woman's career is different. We have a lot of career breaks to have children, for example. Only another woman really understand that. Men won't really get that, but that's all part of your financial journey. So really understanding how we feel, and if we have children, working out that work-life balance. Again, you can only really understand that truly if you're a woman. So when I talk to people about their finances, I'm talking to them about a broad range of things. I need to find out more about their, the way they live, who's in their family, and they could be quite private questions. But I find that women can only really open up to other women, and that's one of the reasons actually, and even studies have found why women tend not to, ask for any help, any financial help. Even the women who are very career minded, they tend not to go out and get that help, because for them, when they think about financial advisors or investment managers or wealth managers, you think of men, and they kind of just they tend not to take that further step.
And do you have like your own story with money? Kyla was asking if you have like, I don't know, some people have this, they were in huge debt and then they found a way to get out of it. Or is there anything like that? Or is it just...
I mean, from my point of view, I think similar to yourself, I've had a conversation with you. My mother was, my mother was a single mum, and some of the stuff that she said when we were young was she had shares. So I was brought up in the UK, so she had shares for us, BT shares. So BT shares were British Telecom. And I had no idea what she was talking about. She had BT shares for us, sounded good, but I knew that it was an investment. So somewhere money is growing. And then she also opened up ISAs, which are like tax efficient investments in the UK. So she opened them up for us. So from a very young age, I kind of understood that, there's a way of putting money and it's going to grow for our future. Because she kept saying, I'm putting money away for your future. This was me, for myself and my brothers. So from a young age, I had that in mind, and I thought that's interesting. And then when I started my first job in a bank, I was asked, do I want to put money into their pension scheme? Do I want to put money into their share scheme? And I was really interested in that. Said yes, because I had an idea that that's going to grow in the future. So that was my introduction by my mother, actually, which I don't even know if she realizes, into making financial decisions from quite a young age. But like most other people, when you're young, you do find yourself in debt. And when you're going through college, university as well. So that's probably another topic that I could talk about for another hour, but of how to overcome. But I personally, we all we're human. I went through it as well during university, and then trying to get yourself out of it and manage your finances. But yeah, I mean, I guess the main thing was my mother sort of talking about shares and things. It got me thinking, and got me interested further into the in the area. Yeah.
So interesting, no? Because you mentioned now that my mom did the same, and I think they were really, really unique that time. I mean, if you think about it now, how many women don't know anything about shares or the stock market? I didn't realize it at that time, but my mom and even my grandmother were always investing in the stock market and talking about shares and so on. So I also grew up with it, and it was totally normal for all of us. And then they opened up a brokerage account for us and me and my sister, and now they open it up for their grandkids. So it's actually really nice, which is amazing. So which is even more important that we talk about it now, so that we can pass it on to our kids, but maybe especially the daughters. I don't know, I have two sons as well, so we yeah. But let's understand this a little bit more. Why do you think do women avoid this topic? Why is it so difficult for us? Why is it so easy to pass on to our husbands? Even for me, that I grew up with it and I have my own brokerage account, I'm like, it's numbers and like.
So I think you've just said it there. That's it. Our perception, or maybe not mine because this is my career, but women's perception is it's really complicated. It's you get intimidated by it, and you're thinking, oh, investments, finance. It's much easier to say, right, well, my husband takes care of that if you're married, or my partner takes care of that. That's fine. Well, let's push it over to them. And especially like just touching on the UAE coming out as expat families, majority of the time, yes, the men are the breadwinners. They're the ones that are earning, for the family. But women should still take an active role in that. So there's two things, normally living out as an expat family, women, if you're not working, you get like an allowance for the family, for yourself usually. And from that allowance, what do you do with that? Again, that's something that we could look at. There are ways in which you can do something with a smaller amount of money, for example. So I think, that the fact that it's complicated, it sounds quite intimidating to kind of, get into it. It puts people off, especially women. So it's like, oh, it's much easier to push it away. The other thing I would say is it could be cultural or historical as well. So if maybe not for you and I, but some families, this has been going on for centuries, where the men go out and work, and the women look after the house, or bring up the families, and so it's just normal to let the men take care of the finances. It's just part of the thing, and people just choose not to change. So I think that's the other thing. We need to break out of that and really, if you're not in a position to take it on fully, at least get involved. At least find out, what is going on with our future. Talk, with your husband, and make up. You need a plan. You need a plan for your future, for your children, if you have children, etc. And the other important thing is it's not just money. When you're looking at your finances, also things like insuring the family, just in case, God forbid something happens to him. If we're talking about your husband or your partner, what will happen to the family? That's key as well when I'm talking to my clients, for sure. Insuring the family, that's kind of it goes hand in hand with looking at money and investments, but very, very important as well. You have to get involved. So if he's out working busy do some research, get some information, and start to get more involved, become financially savvy. That's what we have to do as women. We can't sit back, and just say, oh yeah, that's his department. He can sort that out. No.
Okay, I want to come back to this, become financially savvy, but I just want to read a few of the comments here because there's so many coming in. Okay, some people say good morning everyone. And then Kyla says, I have always had control over my finances. You need to be independent as women, especially if you're single mama. You never know what will happen. Take control. And then she says, so interested with regards to Germany, Australia is a lot different. That's interesting too, I think. Because you would think that Germany, and I mean, this is really just a feeling that I get from German moms or women, that in general they also don't like it, and also here German moms, you know, I'm surprised. So it's good that it's different in Australia, I feel. And then we have Ghislaine saying, for me, saving was from day one I worked. In our family, we mostly invest in real estate as we believe assets are safe investments. We were not very informed on the shares, etc. Exactly, that's also something we can talk about. No, the other investments. Correct. It doesn't all need to be about shares, just because I know about that. Yeah, and then she says again, I agree. Sophia, is mostly cultural. Some are more on the savings and investment, and some are in the opposite. And Anna says, great information, Sophia. Okay, and then somebody asked also about, is there anything specific about financial planning for single parents, moms? But I don't actually think there's any difference. But but first, let's talk about how can we as women become financially savvy, like you mentioned. What can we do? How can we start? I mean, this sounds so easy now, but if I go to a website that is full of information about shares or other financial investments, I would be like, or I know many would be like, oh no. So is there a good way to start?
Actually, I think, yes, going onto websites and finding out, there's so many different levels of information out there. It's crazy. And I think, the first thing is, yes, you do need to get yourself slightly educated in finances. But the best way is actually to speak to a financial advisor. I'm not just saying that because, but it really is, because if you can speak to someone who's good, he or she, hopefully she, can actually guide you, and talk you through. Because coming on to, even Ghislaine's question in terms of, some people go into property, for example, and that's their, that's culturally their way of investing. Diversifying is also key when you're looking at investing. So property is great to have. Yes, fine. Shares are great to have. Cash is good to have. But you need to have and a really old term that we use in investments is, don't put all your eggs in one basket. Yeah, I'm sure we've all heard that before. So you need to diversify. So I don't say, for example, I don't say, if you've got some money to invest, put it all into stocks and shares. That's not a good idea either. Putting it all into property is not a great idea. But what you need to be doing is looking at a range of different assets. So some stocks, some shares, some cash, some property. You can either do that physically. So actually, if you've got physical assets, you can buy them. So, or you look at a portfolio that will be managed on your behalf, which actually invests in lots of different assets within that one investment, which is quite easy, really, to understand and to set up as well. So that's one thing. You need to look at, what are the different types of investments available, and don't get confused by the stock market and shares falling and all these kind of things, because then there's a lot of drama and there's a lot of there's vulnerability, and you're thinking, oh my God, then you get intimidated, and then we're back to square one. So you really need to look at, I would say, as a step one, if you've never looked at anything in terms of investments, look at a portfolio that invests in lots of different types of assets for you, something very low risk. And one of my key takeaways from today is and will be, start small, but start. You don't have to have, and that's the other, perception is, oh, we need to have lots of money to start investing or to see somebody to get some advice. No, not really. You need to start somewhere. And even if you start small, that's a start. That's the beginning. So
So how would
that's
you
really
start
crucial.
small? I mean, would you buy a small house or?
No, so I'm looking more at from the investment angle. So if you set up like an investment plan that you're going to pay into either monthly or just ad hocly, if you start even, and also start earlier. So that's the other thing. We kind of sit and think, and that would be a great idea. And then the years pass by. And then before we know it, we've lost time. And there's so many, in terms of our strategies for investing, you invest, the more your money will grow just due to compounding. So it's so key to start small if that's all you can do, and then B, start as early as you can. I actually have that. We can look at that chart actually, Emilia, if you can bring that up
Yeah.
now as
Okay.
well, because that would be a good sort of time to bring that
Right.
up just very quickly so we can have a visual.
Okay.
Okay,
First, yeah.
so essentially, if you look at the chart that that we've got up here, you see three different scenarios, and then literally they're all saving the same amount per month, but one has started earlier, and you can see a 25-year-old started investing just $200 a month. Then you've got another scenario, same $200 a month, started at age 35, and then the same $200 a month started at age 45. And if you look at the value of their portfolio, there's a huge difference there. So that's why I always say, always try and invest as early as you can. I'm not saying if you're 45 now, don't do it. Still do it because you still have something. But if you're younger, go for it. Start. The other thing I would say, yes.
Just interrupt for the listeners that that later on listen to this on iTunes and can't see the chart. So if like a person is starting to invest at the age of 25 and $200 each month at the stock market, he would by the age of 65 have 96,000 US dollars or whatever it is, 96,000. Yeah. And if he only starts at the age of 35 with $200 per month, he would have 72,000. And if he starts at the age of 45, he would only have 48,000. So that's a big difference. So the younger you start, the better, because obviously it accumulates over the years. Yeah.
Correct. So that's the first point, exactly that. So the earlier you can start, the better. Then the second point, actually great, so we can go on to the second chart, is if you start investing a smaller amount because it's comfortable and affordable, what you can then do is, as things become more comfortable, increase the amount that you're investing into a portfolio. So this shows basically your monthly contribution increasing by 5% each year, and you can see the difference there. So especially women, sometimes our perception is, oh, we need to have a large amount of money to start investing. But no, if you start small, just start and then start increasing slowly, this is the effect. You will get a larger portfolio, or hopefully should receive a larger amount. So you can start small but add on. So that's the second chart right there.
Okay, let's take that away again. And if you say a portfolio, would that mean just an ETF, a general ETF that follows the world index?
Yes.
Or what would you do?
I usually advise more on active portfolios, so active investments, which mean the levels of, or the asset classes in them can be switched and changed around depending on what's going on in the markets and the economy. So they're actively managed on your behalf. They're mainly what I deal with. From my point of view, and the reason is, if you have a percentage in US stock market, for example, and Trump says something overnight that's going to affect the US, the stock market, then we can adjust the portfolio to put less into that US and more into, whatever. So it's balancing it out. If you look at it as a balancing effect, that's basically how it is. Whereas if you're just following a market, you're going to go through the ups and downs. So there's pros and cons of both. And whichever one you go for, as long as you go for over the long term, you will make money. Over the long term, the growth will be there. That's key, basically. As I say, start small if that's the only way.
And I don't know if you would say that to your clients, but what my parents taught me was like, when you're young, you can be more risky. And when you get older, when you grow older, you invest into the safe big companies. Well, safe, they are never really safe. I mean, if we look at Wirecard, for example, but for example, like in the beginning, I would invest in Facebook or something. Yeah. And because it was more risky or presumed to be risky, but my parents wouldn't, because they said, we are too old now. We need our money for our retirement. So would you say that the same thing? Would you give the same advice?
That's actually, that is very, very true, actually. And in investments, we call that rebalancing. So rebalancing your portfolio. And what we say is, even if we're looking at whether it's individual shares, so you can go a little bit more risky as you're younger, for sure. But if you have investments, as you come closer to retirement, if you've got a lot in the stock market where there's a lot of ups and downs and vulnerability, we start changing them into more into less risky investments, so that you can then start to produce an income from your investments. So we rebalance the portfolio 5 to 10 years before you actually hit your retirement age, if you like. So that concept is absolutely right. So the younger you are, the more risk you can take, for sure. And that can fall into lots of different elements of investing, whether it's individual shares or whether it's a pension plan. When you're looking at a pension plan, you've got 20 years till retirement. I always say to my clients, go a bit more riskier, go a little bit more adventurous, because you've got the time and you can take the ups and downs over the years to get that level of growth. If you're going to invest in 5 years' time, then no, let's just go for a low risk and just make sure that we beat inflation. That's the key when you're looking at a short-term investment. But yeah, that concept is absolutely spot on.
Okay, good. And then let's go back to, because obviously our listeners are, I assume, around our age. And I won't say anything now, but I mean, they're moms and they're, not 20 anymore. So you would still say the same, start small, even if it's only like $200 or $100 or whatever it is, just start, yeah? Or what is your advice? Or maybe we go back even, so you don't have anything, like your husband does it all. What would you do?
Okay, so if your husband does it all, and I do come across scenarios like this. What I would say, why I say start small, is because in the UAE, women tend to have an amount of money for themselves that they can do something with. So what I would say is, look at putting that amount of money, even if it's a small amount, like $200 away into a plan for your future. Then do that. That's just my way of trying to get you to do something. Obviously, it makes sense to put a larger amount into an investment if it is for a goal for your retirement, probably for your retirement at our sort of age. You want to look at the future, maybe not retirement. Retirement is a bit of a for your future, let's say. So it all depends, and the ideal scenario is, even if it's your husband that's earning the money and you're not, as a woman, it's getting involved in it and having a joint plan with him to say, look, let's start to save, invest for our future. That's one thing. So obviously then when you're looking at it as a joint thing, the amount will be higher. But if you really, if you just want to make a start for yourself as a woman and put something away for yourself, then that's where I would say even a small amount, do it, put it away. And then you can increase it as time changes, scenarios change, circumstances change, start to increase it as time goes on. But always give it a try. There's always something you can do.
And I don't know about if you ever have that conversation with your clients, but if, let's say you're not working, or let's say you have a business like us, but it's not like, it doesn't pay as well as your husband's business, and you get an allowance from your husband, what would you do? Because I never wanted that allowance. For me, it was like, no, I don't want like allowance for the household or whatever, or a salary from you. When I stopped working, I was like, no, I just want access to our bank account. That was it. I still had a huge problem with taking money from that bank account other than for food. But what do you recommend, or do you ever have that conversation with clients?
Yeah, well, obviously, being here in the UAE, I actually do. It was a strange concept for me to understand, but it's quite common for women to get an allowance or a salary from their husband. It's the way it is.
Is it? Okay.
Yeah, it is very common. So you have a household allowance, but they do have their own, however you want to put it, whether it's an allowance or a salary or something of that nature. So yeah, and that's why when I speak to women, that they were like, well, I only have a small amount of money, so I can't really do anything with it. But that was where I started saying, well, no, you can. Let's start, put something away. Over time, with compound interest, and the longer you've got, obviously, if you're a bit younger, then you have more of a chance. If you're slightly older, that's when we need to look at, well, can we start to increase it later? But you need to start and using those allowances. Yes. So if you are offered an allowance from your husband, take it and put it away for yourself. Yeah, why not?
And what is a good diversification ratio, like stocks and cash and maybe gold, or
Yeah. Okay, so the way assets are allocated in any sort of portfolio is based on risk. So cash comes in at the lowest risk, and then we have bonds, so government bonds, corporate bonds, property. It could be commercial property, residential property, but within a portfolio. And then you have stocks and shares, and then you have like very extreme sort of adventurous stocks and shares in, I don't know, in the newest thing that's available. So they're going to be quite, volatile, but the investment you get from it is really high. So it's a risk and return balance. So what I normally do is, we have to normally go through a bit of a risk profile with a client to figure out, are they really low risk? And therefore most of their money should be kept in cash stroke bonds, where the bonds will give them a bit of extra return than cash. Because this is the other problem I have just on this point. The studies have shown that even women who have a career, who work, have 71% of women keep their money in cash. They don't do anything with it. And that is bizarre, because money in cash, there's no return. You're not getting a return on that money, but they're keeping it in cash. And it actually depreciates over time by leaving your money in cash, because, due to inflation, your money is actually, it's going down over time. It's not actually increasing. So leaving it in cash is ridiculous, but 71% of women worldwide would leave it in cash. They just won't do anything with it.
Wow.
So yeah,
Wow.
it's huge.
Yeah.
It's huge.
It's huge.
So that's the thing. So yeah, when you're looking at a portfolio, so for example, if you're looking at someone who's midway, medium in terms of their profiling, risk profile, then you have an element of lots of things: some stocks, some shares, some property, some cash, some bonds. and it kind of equals out if you think of a pie chart, so it's kind of quite equal in segments. So low risk, as I say, is going to be higher levels in bonds, cash. More adventurous is going to be higher percentage in stocks and shares, basically. That is where you make the money over time. If you have a lot of cash anyway, and you want to go into sort of an investment, you always put in a little bit of stocks and shares just to boost up your overall portfolio to give you some returns. But that's kind of how we position it.
Okay. And then we have a few practical questions here, but I want to ask one question first. So first of all, one Facebook user, somebody says, okay, I'm one of those who has kept in cash. Let's talk, Sophia. So here you go. You have somebody already. And we will tell at the end how you can contact Sophia, of course. But one question about property. For property, I feel also that you need a big amount of money. So how can you start small with property?
See, when we're looking at investments, property from an investment point of view, you're actually looking at two different things. If you're looking at physical property, so purchasing property, then yes, of course, depending on which country you're in, and you need to obtain a mortgage, you need 20% to put down as a deposit for that property. So that's one way of looking at property, actually physically going and buying property. And yes, it's not a small amount in most cases. Most countries, it's not going to be. You have to save for that deposit, for sure. So yeah, in that case, yes. Then no, it's not like a small amount. But what you can do is you can put away an amount and invest for the deposit for the property, which I do help with as well. So some people say to me, want to buy a property here or in their country, whereby they want to start saving for that deposit. So they know they need, I don't know, whatever it is, $200,000 equivalent. So then they put a plan for that. So that's a separate thing. The other way you can look at property is if you're looking at investments, and we can look at funds that are property funds as well. So that's another way of looking at it. So when I talk about a smaller amount of investments, that's what I mean. So the percentage in property within your investment portfolio, that's the part. It's funds. It's not physical property, but two separate things.
But obviously it makes sense to start saving if you have a property in mind. But I just found the function here that we can actually show the comments. So Ghislaine also says small properties. So that's nice.
Yeah.
Okay, and she had some practical questions, which I will show now as well. So she says, what is the minimum to open a portfolio? So meaning, I think she means like a brokerage account, I guess. Where will the money be in an account? And what is really the process? So yeah, let's talk us all through how can we actually start, whether it's, let's say we start alone without you or without like a wealth advisor, but then we can go later on to a wealth advisor. Yeah.
So essentially, to start small, if you're looking at an investment portfolio, you'll need an advisor for sure. But if you just want to start putting some money into, I think, I guess even any sort of savings account is a start, right? So just to start putting it away, and getting into the habit of putting money away, every month, that is a start. So whether you're looking at investments or an advisor, that's another story. We can leave that aside. But just for you personally, just having the habit of every month, I'm going to be putting away this much and into a savings account, into your bank. That's fine. Let's just start somewhere. So that's what I would say. So start an amount that you feel is comfortable for you, and start putting it away. The other thing I would say just at this point is, practically as well, before you start looking at investments, make sure you have your own emergency fund. So the fund that is available for you just in case you need some money. So you don't want to be investing it all into an investment or property or whatever it is that you'd like to do. Start building up a buffer for yourselves as well, so that, you have something there just for an emergency. So that would be my, point one is, if you don't have a buffer, an emergency account, start building that first. And then once you have that in place, you can start looking at other ways of investing. But yeah, you can start as small as you like, really.
And it's so important, right? Especially now in these times. I noticed also how many people don't have an emergency fund. And
Very
if you
true.
don't know, ask your husband, do we have an emergency fund? Yeah.
That's a good question.
Yeah.
That's a good question.
And how high
Yeah.
should that be? I mean, there's always some, I don't know, how many months of your salary or
3 to
whatever.
6 months. 3 to 6 months is sort of the given. I say it's about 6 months, if you can, would be great, just in case. You know, that's always a good amount to have, but 3 to 6 months is normally the amount that we'd say.
Okay. And then Ghislaine is asking, where will the money be in an account? I mean, okay, you answered that already, but I think she also means that if you want to start investing in stocks, right?
Yes, I think I think her first question, minimum. So if you're looking at a portfolio of investments, which is I think where Ghislaine's coming from, it depends, but usually the minimum is around $200 a month into an investment portfolio, which is I think where she's saying is her question. And where will the money be? That depends on you. So if you were talking to someone like myself, I would ask you questions to try and work out what's the best scenario, and should we go more really low risk or a bit higher risk, or in between. And then I can give you the information as to where the money will be invested. And the process is quite simple. It's like opening a bank account. That's literally how it is. You have some discussions, you confirm, and then you fill out some forms. It's not difficult.
I've tried to open up bank accounts in Germany, and it wasn't easy at all. So
and again, I might take that back. Depends on the country you're opening the bank account in. Yeah.
And the passport you have, and so on. Because my kids were born in America, and for them it's super difficult, for example. But anyway, that's a different topic. I also wanted to show somebody. Annie said that I started a fund for my kid a year ago and invest there every month. By the time she goes to college, she will have enough money to live comfortably for years. In Estonia, we won't pay for education. College education is for free for everyone.
Fantastic.
So that's great, right?
Great. Well done, Annie.
Yeah. So do you recommend that to your clients as well, to start investing not only for themselves, but also for their children, if they can?
Definitely. So important to do that. Yeah. And again, I can calculate backwards, show you cash flow or statements in terms of how much you need. So we can go backwards and say, right, well, I'm going to need $100,000 per child for their education, because that's how much it's going to cost, or whatever. And then we work backwards and work out how much we need to put away and how many years we have until they go to university, college. But yeah, that's so important to do. Doesn't matter where in the world you are.
Okay, great. And then you mentioned about this concept that we should pay ourselves first, right? I read it somewhere in a book that it's called pay yourself first. So you get your paycheck, or you get your money, or you earn some money from a client. Like me, I earn on a client basis. So then I take some of that away and put it on a savings account first before
Correct.
I spend anything, right?
Yes. That's a great concept. And yeah, I think I've wrote a few articles along that line as well. But yeah, true. Pay yourself first, and then do whatever else you need to do. That's really important to do. Very important to do.
And if you're saving for a dream, let's say a dream holiday, how would you go about that? Would you put it on an account that you don't have access to until you go to that, on that holiday a year from now or something? Is that even possible? Can you have an account like that?
So yeah, when you're looking at putting money away, that's goal orientated. So it depends on if it's a short period of time, medium or long term. So if you've got a year to save up for something, then that's a different type of account. and then we really need to look at access to that account and how to do it. But there are, depending on the country you're in, there are fixed accounts where you can't touch the accounts for a year or 3 years, depending on what it is that you're looking to save for. A lot of the investment accounts that we have allow you to take out an amount in 2 years or whatever, and then you can leave the rest invested for future and add to it as well. So it is really about getting advice and getting information in terms of where you're going. But yeah, obviously the shorter the time period, the less sort of the less riskier or illiquid assets that you want to be investing in.
Okay. And then we have another question here that says, what countries do you invest in if you're based overseas? So I guess if you live here,
yeah,
and I don't know where she's from, but where would you invest? In which countries? Does it even matter?
No, I mean it really does depend on talking to people in terms of, if it's a portfolio, then it's a mixture of countries. You could have a bit of Europe, a bit of US, a bit of UK. If you're from a particular country and you want to have investments in those, that can be done as well. When you're looking at from the UAE, for example, all of our investments are international because everybody's from different countries, so it's not tied to any particular country. You can invest if you're from any country really, and into wherever. It just depends on individual conversations, trying to work that out. But yeah, it's
and is it good to have investments in different currencies? Does it make sense?
Yeah, it does, and it depends. I think more so once you're looking to move either to a new country or repatriate back to your home country, then start looking at the currencies of your investments or savings or whatever. Then that will start to make more sense to look at. But if you're out here in the UAE, for example, most of the time investments are in dollars, because the dirham is pegged to the dollar. So most of the time we use dollars as standard. So yeah, it just depends on particular people and investments. Yeah.
Okay. And then we had one more question from Annie, and she asked if you can talk about financial planning for single parents, moms, and still career-minded individuals. But I think I mentioned that before, it's not really different, right?
No, not really. I think Annie's doing a great job, because if I remember correctly, she's put money away for her children already. Then that's what you need to be doing, just putting money away regularly into different investments. So I think she's doing great. There's nothing really in particular that I could say for single mums, apart from put money away for your kids, which you're doing, and just put something away for yourself for your future, if you can. It just depends on circumstances, but put something away. But it looks like you started off doing a great job, Danny.
And I love this talk, and I love all the questions that are coming in. So one question from me, because I use all the like pages that I know, like what websites that I know where I educate myself. But is there anything you can recommend? I know that you write a blog and you write lots of articles on LinkedIn. You share lots of great information. So I'll add your website again here so that people can see, because you can find a lot of great information on her website, on her blog, and so on. But is there like an easy to digest finance magazine or something that you can recommend?
Not really, no. But what I've started doing personally myself is I have and it's sort of work in progress, but I've got a Facebook group where I will be putting out a lot of tips and a lot of information and links to articles that I think are important. So that would probably be quite good for most people to join that, and that will do a lot of the work for you. So I will do all the research and just direct you and into to look at other information, and also there's quite a few videos in there where I'll talk about different topics similar to today that you can click in and out of. So that's my Facebook group as well. So that's called Smart Fortune.
Okay,
so
and
if
we will
you
link to that in the show notes, and of course your website, sophiabhatti.com as well.
correct, yeah. You'll find me on most social media platforms, LinkedIn, Instagram, all of them. So yeah, but I think the if you're looking for a place to go and get some information, it's the Facebook group. It will it will give you a lot of information. So Smart Fortune.
Okay, great, and we will link to that. And last question. Now, maybe specifically for the UAE, because I know other countries have that. But if you want to open your own brokerage account, is there? Because I know I have like an online account in Germany, and I used to have one in the UK when I lived there, and I used to have one in America when I lived there. Like we had like stocks all over the world, basically. But is there a company or like an online business that you can start a brokerage account here in the UAE?
Yes, you can. You can. You can have it online, and you can access it from wherever you are. There's different types. I don't know if we've got enough time, but there's different types. So there's a straightforward platform account where you can invest in different stocks and things like that, if that's what you'd like to do. The other type is actually opening a portfolio for yourself, like an investment portfolio. Again, that's all done online, so you can actually see your accounts online as well. But yeah, you can definitely have it all online, so you can access it wherever you are. But that's something that we'll
okay, so if you want to
find more time to kind
of more about that, contact Sophia or go into the Facebook group and follow her there. Yeah, I love this interview. Thank you so much. The hour is almost over, and
I can't believe that was fast.
That was super fast. Yeah, thank you so much for coming on.
My pleasure. My pleasure.
Next time when you're on, we need to invite you again and talk about this debt topic. How to get out of debt, I think that's also a big one. Anything else you want to ask if you're still watching this, or anything else you want to add, Sophia?
No, I just think, you know, as women, we really need to get ourselves involved and ask questions. So, and this is open. This is not a, you know, if you do have questions, feel free to reach out to me. I'm more than happy to give you as much advice as I can, because I just want you to be empowered as women financially. So get in touch, ask me questions, and I'll answer them for sure. Let's do this.
Great, thank you so much. And people say thank you so much for so much information. That was super awesome. Thank you, me and Sophia. And Renette, thank you for posting the link to Sophia's group, Smart Fortune. And I think the two key takeaways for me were, once again, actually, because we have this with so many topics, is just to start small somewhere, start talking about it, talk to you, talk to anybody, a financial advisor, read, educate yourself, and be interested, no? And talk to your husband. Get access to that bank account.
Yeah, true. That's a good summary. Absolutely brilliant.
And just last but not least, once again, where can we all find you? Can you just go through your accounts again?
So I'd say LinkedIn is obviously linkedin.com/Sophia B Wealth. Get hold of me there. We've got the Smart Fortune group up, which is, thank you very much, Renette. Thank you for that. And my website is another way through, which we have up as well. So yeah, that's probably the main ways to get hold of me.
Perfect. Thank you so much for coming on today. It was a pleasure talking to you. Thank you, Sophia.
Thank you very much. Thanks, everyone.
And just one last announcement that I forgot. We have an Instagram page now, the Moms and Biz podcast. So we will share lots of snippets from this interview there, but lots of other things, lots of advice. We are doing Instagram lives as well, in addition to these lives. So come and join that group, Moms and Biz podcast, it's called. Yeah, and tomorrow, if you're listening live, tomorrow Kyla is doing an interview on her page, which is Succeeding in Heels Instagram page, with Catherine from Crane Creative, and it's all about social media in these exciting times. So we always get lots of questions there. Yeah, but that's it. That leaves us with wishing you a wonderful day, and thank you for joining today. Thanks so much.
Thank you.
Bye-bye. Thank you.